Good morning. How are you all doing? Can you hear me? How's everybody? Good morning, Edita. Good morning, everybody. And welcome. All right. Well, today the market is a little bit more hopeful. Let's put it this way. And perhaps in anticipation of what could be a new rally for the market, the overall, how to say it, the overall state is positive. The Federal Reserve, announced they are firm into cutting rates this year. Yesterday, there was a speech from one of the Fed members, Bostic, who pretty much said that they are on track to cut rates at least one time this year, at least one time. So it means there are not going to definitely be any more hikes, at least for now, unless anything absolutely strange happen. And also that they are confident that they will do it. So that is causing much more expectations, and the probability of a soft landing is every time more and more likely. So it's higher. The soft landing refers to managing to bring inflation down to 2% without causing or taking the country into recession. Okay, that's what a soft landing is. And at the beginning of all this mess, at the beginning of all this, super high inflationary cycle, the this possibility was thought like impossible. Oh, this is never going to be possible to bring inflation down to 2% from 9.5% without causing recession is impossible. And, that's been the narrative all this long. But now that things are going well in the right direction, the economy continues to be extremely resilient, and inflation is coming down, the economy continues to be strong, and we are very close, and the Fed is confident that they may be able to lower rates, then the possibility of a soft landing is definitely very, very high. So I'm looking at the economic calendar here. I just wanted to pinpoint into a few of the main aspects that it seems the market is paying attention to. There was one indicator today, not that very well known, but it is making the headlines. Durable goods orders. Let me just share this with you. And this is maybe, at least as per the headlines, it seems to be the indicator that is moving the market as of today. Durable goods orders. These are the amount of orders being placed for these kinds of long-term duration items in the economy. The previous month, there was a reduction of almost 7% on this indicator. The forecast was an uprise into the 1.2% range, and it was higher than that. It means, once again, the economy continues to push higher, and that's okay. The only concerning point here is that the economy goes up too much, too high, too fast, and we end up in a high inflation environment once again, which is totally opposite to what is to the objective right now. Okay, so what everybody wants, what the Fed wants, is inflation to come down. So that seems to be and that's what the headlines are attributing this initial pop in pre-market. And also, let's remember. Let me just or now that I'm here, just let's check really quick what else is expected for at least today. Consumer confidence that comes out in 47 minutes. That's also important. These measures how confident consumers are at the time of spending. Are they saving more money or are they spending more money? That also is a good pattern that the Fed tracks. It is released in about 47 minutes from now. There's speeches from the Atlanta Fed at 12:30, and for the rest of the week, Wednesday, tomorrow, crude oil inventories. That's typical. GDP on Thursday. This is perhaps the most important one this week. GDP. This is how the economy of the United States is doing. It is expected to come down. This is definitely going to be a market moving indicator. And this could definitely spark a sell-off or a rally. Let's remember Friday is a holiday, Good Friday, and the market is going to be closed. It will be open once again on Monday. So that's a 3-day weekend, and there's a lot at stake here. So this indicator, it is released on Thursday. If the economy comes up higher than expected, then it is not going to be good for the market. Everybody's expecting things to go down. Just look at the numbers. They are expecting a reduction from 4.9 to 3.2. If it is lower than that, concerning. If it is higher than that, concerning. So it must be right on target. So the likelihood is slim. And so the market could react. Also, jobless claims, as usual, it is expected to rise once again. So more people losing their jobs. That's the expectation. Let's see how it comes. And manufacturing price index. Okay, producer. Forgot the exact translation here, but it has to do with prices in manufacturing. So that's important as well. And the one that everybody's paying attention to is on Friday, core PCE. These two will be released on Friday, plus Powell's speech on Friday. The market is closed on Friday, so nobody knows how these indicators will come, will be, and if they are good, good, but if they are bad, nobody can do anything. So I think the GDP may spark optimism or pessimism, plus what is to be expected on Friday, plus Powell's speech. So I think Thursday is going to be a red day, at least at the end, especially if the GDP comes higher than expected. Okay, so let's see. That's my guess, and that's what's to be expected at least for this week. On the technical side, once again, nice pop pre-market selling at the moment. Let me clear all this up. This is the SPY in a 5 minutes chart. Beginning to regain some momentum, although trading almost sideways, at least at the moment. same as the market highs yesterday, 521 pretty much, with a high at the 522.2 level. So let's see how it looks on the 1-day chart. Yesterday was a red day. Once again, red day on Monday. I'm sorry, on Friday, on Thursday. The gap has been closed already. Very likely to see this level to be retested, the 518.22. It was the all-time high a few weeks ago. Now it will be support, and that's also the 8 moving average line. So very likely to see the market retesting those lows. As you can tell, the market already traded at the 522.22 level. And if this optimism continues, then we may see, maybe today, maybe tomorrow, these 524.11 once again being retested. I would like to see more of a correction, but who knows? These three areas are very likely for today. New, maybe not a new all-time high, maybe it is, but at least a retest of this all-time high, in a likely retest of this previous resistance level that now will act as support. So this is what I expect for today's session. Yesterday it was very, very uncertain. You can tell based on this candle, there's no clarity as to where the market should head. The market is waiting for, more news, more clarity on what to do now. This also opens the door for a short squeeze. I was talking about that just a few minutes ago. Most investors, most participants believe or may be thinking that this will turn into a big sell off market. And if the market continues to rally, then all these shorts will have to cover their positions. When you're short and you have to cover your position, you have to buy your positions back, which adds up to the buy-in force, and that causes the opposite effect. That causes prices to go up even farther and faster. So the market is also prone and primed for a short squeeze, which could happen at any time. So everybody's like waiting for the perfect timing, but it is also likely that the market turns out into a short squeeze. All right, so that's pretty much what I have. Volume has been very low as well lately, okay? And the expectations are for more participants to join, to more volume to get to the market. And so these moves will be much more decisive. And, the market will be much more active. At least yesterday, it was very, very slow, very low participation. So we are expecting more confidence. This is definitely a sign of uncertainty. The market is not confident a lot at all. So hopefully we get to see a greater participation, greater volume, and finally a decisive direction, either up or down. So let's see what the market brings us today. Those are the possibilities, at least from the technical standpoint. And that's pretty much the most important thing. Some companies making the headlines this morning, some that I have not even heard about. One that I know Camilo was talking about it, is Seagate. pre-market going up on news that Morgan Stanley analyst upgraded the stock. So we have this gap close opportunity this morning right here. These catalysts are very, very weak. Typically they sell off. So we'll see. There's another one. This one I have never heard about. This may be a weak catalyst as well. Krispy Kreme is a food manufacturing company that pretty much announced that they will be selling donuts at McDonald's stores. There you go. And because of that, the stock is popping almost 14%. This is another great candidate for a gap close this morning. I like this too. This could be weak catalyst. The same happened to Beyond Meat, this company that makes like vegetarian meat-like products, burgers and all that kind of stuff made from vegetarian ingredients. When they said that they would be selling their burgers and stuff to McDonald's, they popped like crazy. And days later, that just fade away. So this could be another one of those. So let's pay attention. 13.9 down to closing the gap. Same for Seagate. And the last one is McCormick, which is a food manufacturing company as well. This is more specialized on the spices sort of products. They manufacture spices for cooking. Let's see if I am typing this correctly. Yeah. MKC. This one is also popping, probably a gap close as well. So there's three of them to keep an eye on at the open for potential gap close. Okay, I like it below moving averages, maybe somewhere here. And so there you go. We have three opportunities this morning. These are the ones that are moving the best at this point. Two of them perhaps with weak catalyst. This DNUT company and Seagate. Let's see what happens at the open. But those are good opportunities that I think could end up in gap close this morning. Okay, that's all that I have for today, guys. I'll see you right over at the main room, and I wish you a great day and awesome trading. Okay, see you guys later. All right, guys, how are you? Can you all hear me? Oh boy, I don't have much of an audience today. Everybody forgot about me today. All right. So, how's everybody doing? Questions, please. What a day, huh? What a day. Um, have to admit, every once in a while, trading can be very stressful. This is one of those days. Guys, I'm gonna ask you to give me 1 more minute. Give me just 1 more minute. I'll be back. Okay, I am here. So once again, how's everybody doing? Can you all hear me? Ok. Carlos Camacho, ¿me pueden ayudar? ¿Cómo cierro esta posición? ¿Estás por aquí, Carlos Camacho? Seguramente no. Ok. All right. I have one of you asking me, how can you close a position? Can you please help me? That's the reason why I ask you guys to please practice before you begin trading with significant amounts of money. Okay? You don't want to do that. You don't want to be in the middle of a trade not knowing how to close a position. Question is, where did you get it in the first place, right? Please practice. Make all mistakes you want trading with one penny stock, okay? That's, as a matter of fact, part of the conversation today. We're going to be talking about strategies. And one good strategy before even taking trading to the next level is to practice. Practice, get to learn the strategy, the platform, the apps, how to buy, how to sell, and so on and so forth. So please practice. Do not buy or do not invest significant amount of money if you're not familiar with the app. If you don't know how to buy, how to sell, please don't do it. Okay? Don't harm yourself. You can make all mistakes you want with one penny stock. Okay? What's the worst can happen? You lose 20 cents. And you learn from the experience. Don't do that with important capital. Okay? Please don't. It really affects your psychology, and everything goes bad after that. Okay? Please practice. All right, so is there any questions for me, folks? I want to spend a couple minutes just going through the chat really quick, making sure there's no questions unanswered. There's only 10 of you here, including myself, so there's only 9 of you. So I will have plenty of time to address you in each one of your concerns or questions. Thanks, Cal. Thank you, buddy. I know you're here. So how's everything going, Cal? How's your trading going? Are you practicing? I know you're very methodic. So are you practicing already? Mónica, we're here. Sí, adelante, Mónica. No hay problema. ¿Te puedo responder en inglés, Mónica? Y así incluimos a todo el mundo. Okay, you're practicing good, Mónica. Cal, could you please show trend reversal chart? It is going well, still learning. All right, good. So we will talk about trend reversals. Mónica, las resistencias y soportes es inteligente confirmarlas con Fibonacci retracement? Sí, ¿no? No es necesario, Mónica. So Mónica is asking me if once you have support and resistance levels that you have identified, she's asking me, is it necessary to confirm these levels with Fibonacci retracements? What do you guys think? Let's brainstorm here. So once you have identified, let me just blow this up. Once you have identified levels of support and resistance in a chart, right? Known levels of support and resistance. Is it important, is it necessary to confirm or double check these levels using Fibonacci retracements? What do you guys think? Say yes or no. Is it? Please type anything that comes to mind. I just want to have a feeling of what you guys think. Only when there is no history. Cesar. Good. Anyone else? Cesar, you're texting me, you're messaging me directly. Please make sure you message everybody in the room, okay? So Cesar says only when there is no history. Monica, can you understand me in English? Just please say yes or no. I know you type in Spanish, but just let me know if you are understand. Okay, good. So there's no need, Jessica, okay? No need to double check levels of support and resistance using Fibonacci retracements, okay? We use Fibonacci when there is nothing else known, okay? For example, I know that this is the all-time high for the market, right? If prices were here and I am wondering what would the next level be, and there's no history because this is the highest ever known level. So I would use Fibonacci retracements to identify what the next level could be. That's when I use Fibonacci retracements, okay? That's how I use it, by the way. There is a book that you guys have access to with more than 300 pages on how to use Fibonacci. All kinds of strategies with Fibonacci. I don't do that. I simply use Fibonacci retracements to understand what the unknown levels of support and resistance could be. So I use the tool Fibonacci retracements. I take the previous high. As a matter of fact, if this is the case, the previous high would be, this is quite tricky right here. Previous high, previous low. This one is not easy. Let's see. Maybe I would have to use this previous high and this previous low. There you go. And so I will be looking at this level right here, the 152.33 as the next one in line, and the 526.87 or 89, okay? Somewhere here. And I already have an idea of what could the future look like if prices ever trade. And this is just hypothetical, of course. We are not facing that situation at this time. But assuming the prices were trading somewhere here, about to go above the historical high, this is one that I will be using as reference, and this is the next one, okay? And same if prices are going down and there is no reference as to what the next support level could be. Is that clear, Monica? Cesar, no need to be sorry, man. Just so everybody can read you. You did nothing wrong. Okay. Anything else? Please feel free to ask any questions. This is a very tiny room today. I have all the time to answer your questions. Cal, you told me about trend reversals. So my best tool for trend reversals, and the one I like to use, is the trend lines and the crossover of moving averages. Okay. Those are the best tools I have for trend reversals. Fibonacci is one, but that's not actually a trend reversal. Fibonacci extend, I'm sorry, not Fibonacci, Bollinger Bands, okay? So let's talk about a few things here. One easy to catch is breaking above the top Bollinger Band or the bottom Bollinger Band. You all know when the price trades above the top Bollinger Band, it suggests almost an immediate correction, okay? If prices are trading below the bottom Bollinger Band, it suggests almost an immediate correction, okay? But that doesn't mean the prices have been trending, all right? There's many instances in which prices have been trading sideways. All of a sudden, there is a good catalyst for the price. Bollinger Bands are here. And this catalyst, maybe earnings report, shoots the price up somewhere here. And it is trading above the Bollinger Band. It suggests a reversal, but this price is nowhere trading high or low. It is just sideways. Make sense, Carl? Do you see the difference? So one tool we use for reversals is the Bollinger Bands. Anytime prices trade above or below the Bollinger Bands, then we expect reversals, all right? But it doesn't necessarily mean that the price has been trending up or down, okay? This is just one example, all right? So, the other tool I like to use is trend lines. As a matter of fact, this is a great example because I've been talking about this one. I have been paying attention to this trend line, this uptrend that started in October. I'm just gonna link these two dots here. I'm gonna extend and project and see how this trend has been changing. There's maybe a fan trend here going on this one as well. Remember the fan trends? You learned that too. There you go. And there may be one more right here. Extend. Oops, sorry. The other way around. Extend to the right. Okay. So you may remember from the course those fan trends, right? They look like this. So this is what I'm trying to identify here. This trend is so strong that it has turned into a fan trend, okay? And the origin is here, okay? October 27th. So I'm curious to see when will this trend break. So for trend reversals, Cal, trend lines is one of the best predictors, okay? Because you see it right away. The crossover of moving averages happens after the fact, okay? You begin to see signs when the slope of those moving averages begin to change. So those are early signs. So looking at this super trend, the market can comfortably trade at this level, right? It may even retest the number 8 moving average. It may even retest this line. And the last support level is these two lines, the moving averages 20 and 21, right? And if it breaks below, I said it before, when you see this break below, then we are up for a trend reversal, okay? The rest are just corrections, okay? Simply mere corrections, okay? Even if they come here, or even if they come to the moving averages in bounds, okay? Those are simple corrections. We will talk about reversals when we see a clear break in confirmation below that trend. Make sense, Cal? So far, so good? Is there the confirmation candle in trend reversals? Of course, of course. So what is an uptrend and what is a downtrend? You guys remember? Can anybody tell me what an uptrend and a downtrend line is? You guys remember that from the course. What is an uptrend or what is a downtrend? What is it? What are they? You remember, Cal? What are they? What are uptrends and downtrends? That's basic. Guys and girls, do you remember? Any of you? Up, trend, higher, high? No, that's how they are formed. What are they for us? They are levels of support and resistance, just like anything else we have learned. Okay? Higher highs and higher lows is how they form, how they take shape. But a downtrend is nothing than a resistance. Okay? So if the price hits resistance, breaks and confirmed, so we can expect prices to move in that direction now. Likewise, if the price breaks and confirms below an uptrend, which is acting as support, then we may expect prices to continue heading on that direction. You guys remember? Uptrends and downtrends are nothing but support and resistance levels with slope, positive or negative slope. Remember? I feel like quizzing you today, guys. What are the different types of support and resistance that we have learned so far? Can anybody remind me? What are the different types of support and resistance that we have learned? There's 4 types. What are they? Static, dynamic, and what else, Cal? There's 2 more missing. I'm listening. See why it is important to study? What are the types of support and resistance? Static levels. Those are the lines that we draw, and they are static because they never move. They sit at a price level, and that's what it is. Static. All right. Then we have dynamic. Okay. What are they? Moving averages, right? Those moving averages are support and resistance because they act as such, but they are moving all the time. Price fluctuations cause these moving averages to move. So they are dynamic levels of support and resistance. Number three, trend lines. An uptrend is nothing that support. support. That's what an uptrend is, support. So you may expect a break in confirmation below support. That's all it is. All right. Bollinger Bands are not support and resistance. That's a different thing. Downtrends are nothing but resistance. Okay. When the price manages to break above, then you have a new trend. It's the best predictor for trend reversals, uptrends or downtrends. One is support, the other one is resistance. Okay. So it's the third type of support and resistance. What is the fourth? Top and bottom level of price is the fourth. Well, those are static, Marisol. Static. There you go. That's the first example I gave you. Top or bottom or whatever it is just a static level that goes across. Historical, same thing. Same thing. It's just a level, a price level. It's static, doesn't change. It's sitting at 201.23, whatever the case may be. It is a static level. It is a price level. It doesn't change. Okay? Remains the same. Therefore, it's a static level of support and resistance. Dynamic, it is moving around. Moving averages. Okay? Price levels. Trend lines, up or down. What's the fourth? Psychological levels, right? Psycho. How do you spell that? Psycho, I believe, PHS. Psychological levels, which happens to be some sort of price level as well, okay? But it has a certain particular connotation. It's a level for which the price has never been before or is so key, right? For example, the first time that ever the price reaches the 100. This is key. This is a psychological level, okay? Okay. For the S&P 500, 5,000, 5,100, 5,200. These are unknown levels, very psychologically embedded, okay? So that's another type of support and resistance. You guys name another one right here, VWAP. But VWAP makes part of the dynamic, okay? As a matter of fact, I'm not gonna make another category because VWAP is a dynamic support and resistance level, okay? It moves up and down. It's part of the dynamic support and resistance level. Bollinger Bands are not support and resistance, okay? Anything else here? And the last category is the unknown. But look, I'm gonna write it down, but I'm not gonna include it. Is the Fibonacci retracements, right? But Fibonacci retracements are nothing but price levels, right? So they are static too, right? I just gave you an example. I projected a price level based on Fibonacci, but it's nothing else than a price level. It won't move. It's set at one price. Therefore, it's static. So we have really four types of support and resistance, okay? Statics, price levels, including Fibonacci, dynamic levels, moving averages, VWAP, trend lines up or down, in psychological levels. That's it. All of them behave the same. In all of them, you may expect breaks and confirmations up or above, suggesting continuations on that direction. Make sense, Cal? So to your question, if I should expect a break and confirmation below those trends, then the answer is yes, because they are support and resistance levels. Make sense? Ok. Mónica, sí, lo que pensé es si se podía hacer a manera de confirmación de los sí, Mónica, te entiendo. I understand you. You want to make sure what you did is right, but that is going to confuse you, okay? No need. No need for that. How do you know you're choosing the right level of support and resistance? Because you will find lots of interactions, okay? The more the price acts on that level, the more coincidences there are, the more relevant that level is, okay? Unless it is an all-time high or an all-time low or the lowest or the highest for what you're seeing, okay? The top high, the top bottom are always key levels of support or resistance, always. And when you are in doubt, then you just count how many coincidences, how many times the price has acted on that very level. The one that has the most interactions is the one that is the most relevant, okay? And sometimes you have no clue because there are so many. And then you say, okay, there's neither a level of support, neither resistance. This is an area of support and resistance. And it encompasses the whole thing, okay? It's so crowded, not clearly defined. So you choose the entire area as an area of support and resistance. Make sense? Is that clear? All right. Cesar, if cross the 200 and confirms, run with it. Um, well, when the price breaks above the moving averages, in your question, the 200 moving average, when the price crosses up or below, it is the same effect. It is breaking above resistance or it is breaking below support. Super critical level of support and resistance, right? Is the Chinese wall. It is so hard to cross. It is so important on any direction, okay? It behaves the same and is a dynamic level of support and resistance, okay? Okay, good. Fernando, please, with so many instruments, how do you do? With so many instruments, how do you do to maintain the levels for all of them? Fernando, it's a skill, okay? It's a skill. It is really very simple. It just needs practice, okay? It is quite simple because you're always doing the same. It is so simple. I'm going to give you an example in practice. So simple. So let's do a few together. This is the S&P 500, right? 1 day chart, clear chart, and I start from scratch, okay? This is definitely one that calls my attention. That is the top. I don't see anything else. This one calls my attention. This one calls my attention. Why the price was going up and it stopped here? Definitely another one. This one calls my attention. This one calls my attention. There's different interactions here. So these may be important. There's a reason why the price didn't drop below that level. And just to name a few, this one is standing out, right? It's like glowing in the dark, and so on and so forth. Okay. Let's move to something different. Let's go to this penny stock. Okay. CHEK. I don't even know what that is, but let's go there. First time I ever see this chart. And you ask me, how do you do to do all of them? Well, it's the same every time. Look, new chart. This level definitely stands out. Boom, one. This one stands out, is support. For what reason the prices didn't continue to go down? One more, right? The prices stopped trading here today. Why? Well, what a coincidence. Look, the prices stopped trading low on this day at this point. This is what's causing the price to stop here today. Next in line, the 200 moving averages. And is coinciding with this price action right here, right? Almost perfectly. Look. So the next area will be 2.8 and above. And if it manages to break the 200, what would the next level be? Maybe these lows from here, maybe this high. If it is not clear, then it may be an area. I just said it. Oh, there's too many, Oscar. So which one to choose? Well, it means then, and we have an area of support and resistance right here. Okay, could be any of that. The next one in line, right here, and so on and so on and so forth. Okay, it is always the same. And from here, I can go to another different chart, OPGN. And I can start from scratch once again. And by now you get the point, right? It is always the same. So it's nothing special. It is just to understand the concept, right? It's like if I give you 100 books, all written in Spanish, right? And then I ask you, Hernando, how come you can read so many books? What do you do to read so many books? And you say to me, well, it's just the same thing. Every page I open, I can read because I know how to read. So I can read this book or that book or that book. I can read one page from every book every single day, right? It's the same skill. The skill doesn't change. Make sense? So there's 17,000 different ticker symbols in the market. It's not how many of them there are. It's just that all of them behave the same way. Okay. Did I make my point, Hernando? Does that make sense? And I hope it does. Okay. All right, folks. Anything else? Do you have any questions for me? I would be bombarding myself with questions if I were you. Okay, so let's talk about strategies then, if you have no questions. Maybe to get started on this conversation, I was just thinking, Monica, go ahead. Type it in. What's your question? In the meantime, just to get started on strategies, I just want to make note that most of you, hopefully you don't, but most people confuse the type of trading which has to do with long-term swing trading, intraday trading, and scalping. This is a type of trading, not a strategy, okay? This is not a strategy. Just to make sure, okay? Because some people ask me and refer to swing trading or intraday trading or scalping like a strategy, as a strategy. This is not a strategy. It's just the type of trading. Are you trading long term, which is more on the investment side? Are you swing trading? Are you intraday trading? Are you scalping? That's just the type of trading. And it has to do a lot with the level of a skill that you have as a trader, your personality, and the level of risk that you manage. Okay? That's all it is. It is not a strategy. All right? Now, strategies on the other side, there are many. I teach you several, but there's hundreds, thousands of them. Okay? Every guru will teach you one. Okay? Good or bad, better or worst, I don't know. But there's many of these strategies. So my note on this is learn one or two that you can quickly become profitable and consistent. That's the key here, okay? The key in trading is not to learn 1,000 strategies, okay? It is to be consistently profitable. That's the key. Consistency and profitability. If you are consistently profitable, trading one strategy, one ticker symbol, every single day, you made it. You don't need anything else. You can forget about the rest, okay? So focus on consistency and profitability as soon as possible with one strategy, to the most, okay? Once you get this level of consistency and profitability, then you may learn 1,000 strategies in addition to that, okay? Learn as many as you want, but do not stop collecting the golden eggs from the golden egg goose, okay? Don't stop doing it. Don't stop doing it. That's all you need. One strategy that allows you to be consistently profitable, all right? There's thousands of them. Learn one. Develop the skill, the personality around it, the level of risk. Is it a strategy to scalp? Is it a strategy to intraday? Is it a strategy to swing trade? Is it a strategy that allows you to do everything? I don't know. But you just need to learn one. So far, so good? Never mind, I think you're going to talk about it actually earlier. You spoke about Foot Locker for long. Can you tell us how can we do as we were the stop? Okay. Yeah, you want to know more details about Foot Locker? I'm going to go there. Discipline? Well, all kinds of traits. Okay, Carl? All kinds of traits. Discipline is definitely one. Okay? Discipline. Of course. Be disciplined enough to focus yourself on one thing at a time. Okay? Learn one. If you begin jumping from one strategy to other strategy to other strategy, and every single day you try a new thing, then that's not consistency. You're just shooting at everything that moves. Okay? That's not a strategy. That's not a good procedure. In the end, you will not be consistent with any of them. So find one, stick to that, be disciplined, do not trade anything besides that. Okay? Some of my most profitable students are the ones that understood this concept. Okay, you may remember Aldo, for example. Aldo Salazar. Aldo loved unusual volume. He just liked that strategy. He liked it so much that everything he does is unusual volume. And you will see every time he posts something, he's telling me, Oscar, look at the unusual volume here, look at the unusual volume there. He became an expert on this strategy. He's learning some others, but he's always trading unusual volume. That's the one that he liked. He chose that strategy. He focused on that one. And he's making so well trading unusual volume. You may recall Uriel, another one of my students. Uriel only trades run into earnings. Every time he types something in the chat, he's telling me run into earnings. Check this one, run into earnings. Check this one, run into earnings. He's focused on one strategy, one and only one. And he's mastering that strategy. So he's being consistent and profitable already. So that's my same advice to you guys. Choose one that you like, one that you understand, learn every single detail about it, and become an expert, a master on that strategy. That will lead you to be consistently profitable. Okay? And once you have that, first, you don't need anything else. To be honest, you don't need anything else. You got it. You found your ATM machine in the market. You found the key to go to the market every single day, take money out, and go. You want to learn more? Be my guest. Learn as much as you can. But find one that gives you profits every single day. Okay? So you need to be disciplined for sure. You need to be focused, disciplined, and keep working. Okay? Because this is about improving the level of skill, mastering the strategy, practicing. Repetition is the mother of all skills. Repeat, 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 repeat. As Bruce Lee used to say, I am not afraid of the fighter who can kick 1,000 different kicks. I am afraid of the fighter who has kicked the same kick 1,000 times because that kick is lethal. If he gets me with that kick, I'm dead. So be a master of one thing, manage it, and then you can learn everything. All right? I think I made my point, but let's keep moving. So there are different strategies. Some of them are fitted for short-term trading, others for long-term trading, others for, uptrends, downtrends. Maybe I will just share that slide with you once again. Let me just find that slide and I'll share it with you guys once again. So you may recall and we can have another conversation on that. Give me just one second. Meanwhile, you can type in your questions if you have any. Please feel free. Let's be very efficient here. Strategies. There you go. I think I found it. All right, I'm just gonna use this slide, okay? Okay, well, this is, damn it. I opened up the Spanish version. Duh. You know, let me get the Spanish version. I have it right here. It's all the same. I don't want to spend more time on this. Okay, so let's just recap on the strategies, okay? Again, there's a million of them out there. Every guru has its own strategy. And that's fine. That's fine. Okay, some are better, some are worse. Okay, and I'm going to share my screen. And this is the summary of strategies that you learn with me, some others as well. So penny stocking, ideal for chairs. As a matter of fact, we only use chairs. We only trade the stocks here. But notice one thing. This is only with chairs, scalping, ideal for scalping, ideal for intraday trading, ideal for swing trading. We're talking a week, 2 weeks, 3 weeks. Okay, is not suited for long-term trading. Okay, and it is just to the upside. So we only trade this long. Okay, break confirmation continuation. Ideal to be traded with shares, with options. You can scalp intraday, swing, position trading, uptrends, downtrends. That's the universal key. That's a must, a strategy to learn. Okay. No wonder I use it every single day, every single time. It's the universal key. You can use it for pretty much everything. Okay. If I was given the task to trade and make money using only one strategy and only one alone that I could use, this would be my to-go strategy. I wouldn't use anything but this. Okay. TFC, bull flags. You can trade it with shares, options. You can scalp, intraday, swing trade. Not very suited for long term, although you can do that too. But the probabilities change. Uptrends, downtrends. Okay. Short squeeze, same thing, but only swing trading and only to the upside. And you begin to see those variations, right? So, and there you go, run into earnings. This is Uriel's sweet spot. This is his cup of tea. Shares, options, swing trades, because he doesn't like to scalp. Remember your personality. Maybe you're not built for scalping yet. Maybe you do not enjoy scalping. So avoid these strategies, okay? You know what? I also don't like intraday trading. I only like swing trading. Okay, these are your strategies. Okay, focus on these strategies. So you have running to earnings. I guess this is some of the work he did. Okay, Aldo is right here. Unusual activity. Only with options. Swing trading. You can also scalp and day trade. Long term as well. And you got the point, right? There are different strategies, different conditions. Find one that you understand. Go back to the definition of the strategy. Oscar, I am not good for scalping. Okay, then do not scalp. Doesn't matter. Use 1 hour charts and do intraday. How about that? Use 30-minute charts and do intraday trading. Focus on swing trading. That's totally profitable. Okay? As a matter of fact, I show you guys, I am making more than $20,000 today of swing trading activities. It's phenomenal. I love it. but I can also make money scalping or intraday trading. All of them are fantastic. All of them. Okay. So just choose one and focus on it. Okay. Questions? Am I making my point here? Mónica, cada tipo de trading representa un nivel psicológico diferente. Por ejemplo, scalping es súper fuerte psicológicamente, hay que tener mucho balance. Scalping es súper fuerte. Yo lo siento como nivel 10 por la parte psicológica, económica, corrígeme. Mónica, you got it. Scalping is among the toughest trading styles. Okay, it's not a strategy, it's a type, it's a style of trading. It's among the most difficult trading styles. You must master everything to be a good scalper. Okay, first of all, you need to know the strategy. You have to learn the strategy. When you scalp, there's no time to ask, oh, where is my stop? Oh, where's my exit? Where do I find the sell button or the buy button, right? There's no time for that. Everything happens too fast. There's no time to hesitate. Is this a confirmation candle or is this a pullback candle? Is this the right level of support or is it not? Everything happens too fast and you need to master everything about the strategy if you want to scalp with success, okay? It's a master's level trading style, okay? If you're not here yet, don't worry. Intraday trading, 20 minutes, 15 minutes, a half an hour, 1 hour, 2 hour charts, and you have enough time to think, to plan, to conceive, to click the buttons, to do everything, okay? It's a slow motion. And develop the skill. The more you do it, the more and the better you will get. So you go from, say, 30 minutes down to 15 minutes, down to 10 minutes. And all of a sudden, you will be trading in 5 minutes and you won't even notice because you have already developed the skill. Okay? It's like when you learn how to drive. You're in the parking lot, looping around the parking lot, and all of a sudden, you're driving in the highway. Okay? It's a process. We learn by practicing and repeating over and over. Okay? Lo que hacemos en vivo es scalping y todos creemos que estamos preparados cuando terminamos el curso para hacer scalping y tenemos más tiempo para participar activamente en las actividades en vivo. Well, everybody's scalping, or I do a lot of scalping trades because most people want value right away. But the fact that I scalp on a daily basis doesn't mean that you have to do the same, okay? You can always text me, hey, Oscar, what do you think about this idea for swing trade? Or simply tell me, I am looking at Apple on a bull flag in the 30-minute chart. What do you think about it? As soon as you tell me this, I know you're planning to swing or intraday. Because based on the time frame that you're looking at, I know if you're scalping, intraday trading, or swinging, or position trading. Okay? It's all linked to the time frame. Okay? All the strategies are the same. All the patterns are the same. The bull flag is the bull flag in 1 minute or in 1 month. Candles is exactly the same thing. Looks the same, feels the same, expect the same. But the time frame is different. So one will lead you to scalp. The other one will lead you to buy and hold and wait. Okay? So far, so good, guys? So questions, please ask any questions. Monica, we do swing trades. The thing is that they don't come as often as the others, okay? That's the thing. But we do swing trades. all the time. I recommend swing trades all the time. What am I doing? Hold on. Let me stop this presentation. Okay. Questions on that? So I want to know what you're doing, Monique. Tell me, what charts are you looking at? What scanners are you paying attention to? Give me something to work with, okay? What are you looking at? I'm going to give you examples of trades that we have taken. Food Locker is one of them. FL. We came across this opportunity on the one-day chart. Immediately, I'm looking at the one-day chart. This is a swing trade. It's not going to be a scalp. It's not going to be intraday. Forget about it. It's a swing trade. Why? Because I'm looking at the one-day chart, period. So I looked at this pattern. I began to see this sort of rounded floor, and I got interested. And I recommended the 22 or the $20 the $22 call option, I believe it was. That's the one I used, the $22 call option, okay? In the money, that's the next in the story, right? The selection criteria. So I selected the in the money contract and I got in. And if the price would have broken below that low, then I would have stopped out my trade, right? Oh, I'm sorry, I'm not sharing that. Sorry. Okay, there you go. Foot Locker. I saw the one-day chart. This pattern I like. I was interested. I took a position on the $22 strike. And there you go. If the price would have broken below this level, then I would have taken an exit. But I am trading this pattern, which I know, and it looks great. And the prices began to raise. And I believe I took profits here or here. It was 2 days ago. Yeah, I took profits here and I am still holding some positions. I am up 11 and 16%. And I am waiting. I am already locked in. If prices come back, I am out. If prices decide to continue higher, I'm going to make more money. At this point, it's just a matter of managing, right? Not deciding, but managing the trade. So we find these kinds of opportunities. DKNG. This is a recent one. Bull flag in the one-day chart. And this thing continues to rip. I already got out long ago. 60% here, right? Why? Because the next day was Powell's speech and nobody knows what's going to happen, right? So I was just managing my trade. I already did 60%. I played this trade perfectly. Bull flag, swing trade, everything. Moved to my target, actually beyond my target. I was happy. Oscar is doing better. Okay, well, it doesn't matter. It could have done worse if Powell says something that the market doesn't like. And I would have lost 60% profits that I already had in my hands. Okay. So that's another idea. Swing trade. And there's many. Okay. Monica, just simply bring your ideas. Snap. I talked about it today. Swing trade. One more. Look. Does it look like Foot Locker? Or it's just me? Does this one look like Foot Locker? Quite. Up to here, yes. Okay, it bounced off the 200, but it is getting started again. Okay, maybe an inverse head and shoulders. Definitely, if it breaks above the 200 moving average, expect a pop to the 1266. And I have an alert here for a reason, because there is a gap to close on the 1-day chart. So great opportunity. And all this is swing trades, okay? Tesla, I recommend Tesla every single time Tesla sells off. I am a buyer of Tesla. I had made so much money with Tesla. One day I'm gonna buy a Tesla off of my Tesla profits, swear to God. Every time Tesla drops, I buy Tesla. And I make money on the bounce, okay? How? Swing trading Tesla. So that's another idea here. And so the only difference between swing trading, or Monica, let me ask you, what is the difference between swing trading and intraday trading? What is the difference? Between swing trading and scalp trading? The time frame, exactly. So you got it, see? If you're not ready for scalping, that's totally fine. It doesn't mean anything other that you need to practice more. That's all. You need to build the skill to work faster. That's all it is. But while you do that, focus on longer time frames, 15, 20, 30, 1 hour, 2 hours, things like that. Is that clear? Yeah, go ahead. You have any more questions for me? I'm reading your comments right here. And of course, your emotions are all over the place because you don't feel sure, okay? You don't feel sure, you feel anxious. You're doing something, your inner self is telling you, hey, don't do that. You don't feel comfortable. It's like if you wear clothing that makes you feel uncomfortable, okay? Maybe too tight, maybe too loose, maybe too open, I don't know. You're wearing something on that you don't feel comfortable with. And then they tell you, you have to go out on the street and be in front of people. How would that make you feel? Right? So you feel nervous, anxious, you don't feel confident, uncomfortable. Exactly. It's exactly the same thing. This is like wearing clothes, okay? Make sure you wear the clothes that make you feel the best, okay? Nice and beautiful and confident, okay? That's what you need to do. Same with trading. Trade the strategies that make you feel comfortable at all times. If you feel uncomfortable, is your inner self telling you, hold on, you're not ready for that. That's what Sonia teaches, okay? Hear your inner being, your emotional system. If you sweat, if you feel uncomfortable, if you're fearful, it's because you're not 100% where you must be. So pay attention to those signs and realize where you are. Okay? Good. Any more questions on strategies, folks? Cal, like 5 minutes or 10 minutes by using 1 or 2 minute charts. I lost you on that one, Cal. What do you mean? Like 5 minutes or 10 minutes by using 1 or 2 minute charts? For scalping, well, you know, I scalp in 5 minutes. I can do it in shorter time frames, but as a matter of fact, you guys changed me. I used to scalp in 2 minutes. All right. I used to do everything that I do in 2 minutes, but I realized it's too fast for most people. So I flipped to 5 minutes and I achieved the same level of results. Nothing changed, but the stress level went down by far. And I like it. Okay. I think it's enough. So I don't use 1 minute. Hell no. Not even close. 2 minutes. Not even close. 3 minutes, maybe 3 minutes. If I see something like what I saw today in Canopy Growth Corporation, we saw this nice bull flag in the 3 minute chart, remember? And it kept rising, look, all the way up to 805. I just got out here, 20+%, more than enough for me. So I saw this pattern in the 3 minute chart consolidation. That's what I took a shot at this, okay? Just because of this. Otherwise, I wouldn't even touch the 3 minute chart. Monica, you have all the tools. You have all the tools. The thing is that you have not practiced swing trading, okay? Most people go through the practice too fast, okay? Because most people want to begin trading now. But if you take the time to practice on the strategies that you feel comfortable with, the program has everything that you need, okay? And I just want you to put on my position for 1 minute, okay? What if I give you this course in which I take you in swing trading activities? And today we analyze one trade and then we come back tomorrow and there's nothing else. And so we just chit chat for 3 hours. And tomorrow, once again, we take a look of the chart and nothing has happened. And then we chit chat for another 3 hours. And the weeks goes on. And then the second week, something happens. How would you feel about that? Just trading the 1 day chart, okay? How would you feel about that, Monique? Too slow, right? That's why I use intraday and scalping to practice. But it is the same thing, okay? But everybody would die of, everybody would be bored to death if we only trade swing trades, okay? When we identify those, we take them and we move on to something else, okay? Just remember, it is the same thing in terms of technical analysis, okay? It is the same. All right, guys, they need me in the main room, so I'm gonna move on there, okay? Hope this talk was good for you to recall some key aspects. I'm coming to the main room and thank you so much. I'll see you guys tomorrow, okay?